Ladies and gentlemen, good evening and welcome to the Bank of Maharashtra Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. We have with us from the management, Shri A.S. Rajiv, Managing Director and Chief Executive Officer, Shri A.B. Vijayakumar, Executive Director, Shri Ashish Pandey, Executive Director, and all General Managers of the bank. I now hand the conference over to Shri A.S. Rajiv. Thank you, and over to you, sir.
Yes, good afternoon to all. And I am Rajiv. Along with me, both executive directors and all our general managers and top management teams is with you for any kind of clarification. To have an opening remarks, I would like to 2 minutes. I will regarding the financial results and important results at a glance. So first of all, thank you for joining us today for these financial results for the quarter ended 30th June. Results at a glance, the total business grew at 25% to 4,20,000 crores and deposits grown by 25% for 2,44,000 crores and CASA stood at 51% of the total deposits. Advances increased by 25% to 1,75,676 crores. CD ratio is around 72%. Gross NPA and net NPA improved to 2.28% and 0.24% respectively. Provision coverage ratio improved to 98%. As regards business figures is concerned, RAM sector, retail, agri, MSME stood at 58.25% and the balance 41% corporate sector, which the bank envisaged that this will continue. Retail advances grown by 25%. Agriculture is grown by 22% and MSME by 29%. While coming to the profitability, the net profit is up by 95% to reach rupees 882 crores 1 year on by basis as against 452 crore for last year. Operating profit improved to 1,863 crore as against 1,202 crore corresponding quarter in FY23. NII grew by 39% year-on-year basis as against 1,686 crore Q1 financial year 23. Fee-based income increased by 17% year-on-year basis. Non-interest income improved to 629 crore as against 317 crore for Q1 23. The growth rate of non-interest income is high because the corresponding last quarter there was such a depreciation in investments was there in Q1 FY23. The current year as against depreciation it is around 45 crore profit on sale of investments. Cost to income ratio improved to 37% as against 40% corresponding last year. ROA improved to 1.33% as against 0.82 FY23. Return on equity 23.73% as against 16.75 for corresponding last year. CRAR Basel III capital adequacy ratio improved to 18.07% as against 14.36% for Q1 FY24. Slightly, the capital adequacy ratio have come back to the marks. It has come down by 10 basis points, mainly because of the operational risk-weighted assets increased by around 2,200 crore for the current quarter, which is the computation is based upon the average of 3 years operational risk and increase in operating profit. So these are the major areas of results, and then coming question answer session we will take it up, and before that I will give this mic to 2 minutes to our ED Mr. Pandeyji regarding the digital transformation, what has happened during the current quarter, how that bank is planning to go for the digital transformation, so that the repetitive questions we can able to reduce that.
Sure, sir. Thank you very much, sir. And welcome to all the analysts for this meet. As you have seen, the presentation and the figures, everything is uploaded in the NSE and BSE, and also in the website. Now coming to specifically on the front, because in the press meet and earlier in analyst meet as well, so there is certain times a question of the sustainability and the other things. So the bank is now putting up a lot of emphasis for almost last 2 years on the technology. So on the credit side or asset side, I would say the three pillars are very important, which is the sourcing, then underwriting and monitoring. So bank has gone ahead a lot, and we have integrated model with which we have told last time also, with the Corpository and the CRISIL and the Pro 42 and the CICs, all the 4 CICs. So bank has built the model on which it is working, and also similarly on the liability side. So many of the things which the bank has already launched, including VSIP. So, but specifically then now digital zone sort of thing which bank has opened in particularly, and a general manager cadre is posted. So they are having the 4 wings within them. It is generally you will see in all the banks put together, there are generally one team which is looking on IT infrastructure and DC network and the data center, etc. And the another one is the digital. But particularly what we observe that we need to understand the UI, UX, customer centricity, and the emphasis that actually it is converted to business. So we have now opened a digital zone headed by a general manager, under which there is a digital CPC, there is all digital TP journeys, and there is a digital audit which is happening through the external experts. And there is a digital marketing team which will be doing, and approximately 5,000 crore of a business which is envisaged through this model. So that is one thing. Now if you see on the website, so all our RFPs which are happening and mostly which we are concluded. So on a control function side, like the entire audit software package we are concluding, and the multi-function kiosk and various other alternative machines. You would be seeing the bank has already concluded those sort of RFPs. Also, I would like to state that there was a press release already by our MD, sir, where it was emphasized that we have onboarded BCG for our digital transformation as our consultant, in which there are 3 pillars. One is the digital journeys, second is the digital operations, and the third is the digital compliance. So probably you will also analyze that digital compliance you would never have heard that an outside consultant, that top two is coming in for digital compliance, so that the compliance is inbuilt in the journey itself. So all the 3 we have started working on that, and that is taken as project Parivartan inside the bank, and that is well taken off. Now coming to the 4th thing, the collaborations. So bank is also collaborating with few. So bank is thinking to have almost 3 to 5% from the first year to come business, additional business, incremental business should come from these sources, and increasing to say 25 to 30% in next 3 years time. So I think this is the brief, and yes, one robotic process automation, which is actually no public sector bank as of now is very much on it, but then we have made already live, and I think by next quarter when we are back, so more than 25 to 30 processes will be live, and in this year we envisage that we will be crossing almost more than 60, and mostly on the reconciliation and the customer journey side. So these are well bifurcated on the digital operation and journeys and on the compliance side. So this is the brief on the digital initiatives, and the budget which bank has taken is around 1,200 crores which bank has taken on this digital initiatives total.
Thank you. And another 2 minutes, our Mr. E.D. Vijay Kumar will talk regarding the staffing pattern and the HR initiative what we have taken during the first quarter, because that is also very important than the other aspects.
Thank you very much, sir. Friends, once again, hearty welcome to this quick analyst meet of Bank of Maharashtra. The results are before you. You have been tracking our performance for the last 4 to 5 years, and we have been number one in terms of the financial numbers. Out of 22 parameters last year, year on year, 16 parameters we were number one, major parameters. Another 3 we were number 2, another 3 number 3 third position. In fact, we almost captured the first 3 out of 12 public sector banks. When you compare with the private sector banks, we compared with those banks which have more than 3 lakh business. There also out of 14 parameters where very comparable we compared. Out of 16 parameters, 7 parameters we were number 1. Others also with top 5 position were there. So some of the areas we are not only benchmarking with our private banks in India, we would like to go along the benchmarking the international in some of the areas. This is what overall view of what we have been thinking about internally to bench ourselves, to compare with ourselves other banks. Coming to the, when the any industry, that is be the manufacturing service, the man begins, the human capital much more important than anything else. In our bank, we give a lot of importance to that. Whatever the financial results we have been quarter after quarter we have been giving, it goes to the investment we make in the HR, and we are consciously, attending to all the issues, whether particularly the optimum utilization of the HR. That was the objective, which we are, to most of the extent we have succeeded. That will be compared with the data. We had a number of staff around 12,532. Now, as on 30th June 23 is 13,344. 812 total our staff have been improved. And so as to say that per employee business, per branch business substantially increased. And when we compare with because of course all the banks have to come out with the results, only this is the second our public sector banks have come. But when we compare the last quarter, there also in those aspects, per employee business, per branch business also, our Bank of Maharashtra has been number 1. We have taken many initiatives to give a training, upskilling their skills, and giving a maximum opportunity available within India, and to some extent now the executives also been sent to abroad for both India and abroad through the reputed managements like NIBM to get feel of what is happening the other side of the border, and that also gives the input to us. This bank was, our bank was operating within the Maharashtra predominantly. More than 65% of our branches were operating within Maharashtra about 3 years before. Now, exactly 50% only operating Maharashtra. We are consolidating, we are improving our efficiency within the Maharashtra because it is the heart and soul of our bank. But at the same time, our eye is on to expand our business outside the Maharashtra where we are getting a good response. In the last 3 years, we opened more than 430 branches in our bank, out of which more than 95% outside the state, and which gives a lot of business. In fact, to give in numbers, 15% of the business came from those persons. Around 45,000 crore business come from these 430 branches opened. Ideally, what we want to have at least one branch in each district. As of today in our country, 797 districts are there. And every now and then, every state's also expanding, dividing the existing districts and making it more. When we started this idea, but it was only 680. In a span of 2 years, it has come to 797. Of course, some of the areas like Northeast and Northern, we have challenges to open, but we are happy to announce that along with this journey, we opened 12 new zones when we opened 430 across the country, and one exclusive zone in Northeast in Guwahati with 25 plus branches are there. So our focus is on opening branches where we get opportunity to do business and get the thing. And at the same time, we are also focusing on our HR in all front. We have been giving much importance to the HR matter. Apart from that, we always say in our all internal meeting and also through any forum when you address business first, but compliance always. The compliance is a very wide term which includes corporate governance, risk management and audit system. So that those areas also we have been focusing, because when there is a growth, there is always a question from all the stakeholders, including analysts, whether it is sustainable, how far it will go. So we are aware of this and we have been giving a much importance to it. I'm happy to share one or two information to you. Like this last quarter, there are 430 branches were audited, out of which 430 was due for audit and around 300 were audited. 230 is completed, I suppose. Out of which 10%, 23 branches were spot certification as second place. It means, see, there is an internal system of auditing inspection internally by our own team. Inspection team is there. When they go, they will make some observation. But we are insisting that those audit compliances, as far as possible, should be complied, rectified, then and there. So the culture of rectification during the audit itself is happening in our branch. This is one indication which I would like to share with you. Going forward, any specific information needed, which I would like to share with you, respond to you. Thank you very much for listening.
So now I think we can go for a question answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Jayesh Shah from OHM Portfolio Equity Research. Please go ahead.
Congratulations, sir, for great results. I just wanted to understand on the provisions for doubtful debts. We thought with the level of gross NPA and the net NPA that you had, the provisioning figure should have come down and credit cost should come down. So, however, it has not. So, how do you expect this to pan out for the whole year? And have you really taken some extra provisioning in view of the RBI norms which were specified last year, which are also in the draft situation? Thanks.
Yes, what you have observed that provisioning we are keeping specifically with an approach to have a more provisioning to protect ourselves for future, because our profitability is good. As you understand that there also we are growing. So our PCR is already 98.37%. So the portfolio wise we have to first take the stance, and that is why we are controlling this, keeping the gross NPA and net NPA at lower level. And some extra provisions for certain other things also we are keeping, that is for ECL and that is for some standard assets also we are making additional provision, though it is not required, but just to cover all these exigencies.
For myself, VP also CFO, this time 250 crore we have made provision in standard asset provision in anticipation of our ECL provision. So we will continue to build up the provision to meet out the future challenges. So that is the thing. And the NPA provision, you know that when you are making the net NPA 0.24%, so almost everything you have to provide. So that we will continue. So we want to keep the our net NPA between 0.24 to 0.25. That range we will continue to do. So yes, going forward, since that already legacy provision we have done, so you'll see that the provision respectively will come down going forward.
Okay. Can you give a guidance now based on this thing? Am I correct to expect that you don't need any other provisioning on your legacy assets and you would only need provisioning on your new loans that you have given?
Yes.
So if one should look at minimal credit costs going forward for the current year?
Yes.
Okay. Would you be able to give a number for the total year for the provision?
Provision would be roughly around.
So this is a number that the present figures, because the slippages, we expect that the slippages may be 500 to 600 crore per quarter. That is means around 2,000 to 2,200 crore slippages for the year may happen because the advance is also growing. So correspondingly, the provision may be required that because then after adjusting this slippages, because most of the assets we have already written off, then the recovery will come under other income. So it will not be under reduction as well as the upgradation. So if suppose 2,000 crore if it's adding for a year, reduction and recovery will be a small figure because assets are already written off, it will reflect in other income, so it is affecting the profitability. So whatever 2,000 crore, the provision 400 to 500 crore provision will continue to be there quarter-wise that.
I see. So if I understand you right, provisioning may still be around 2,000 crore and the recovery figure will come in the other income.
Yeah, yes.
Okay. And going forward, would we see NII growth of 20% plus since you have raised the funding and you are in a fairly comfortable position?
Yes. NII will be, definitely it will be double-digit growth will come.
Okay.
Yes.
Okay. Thank you very much. And congrats once again for very great numbers.
Thank you.
Thank you. We have our next question from the line of Suraj Das from B&K Securities. Please go ahead.
Yeah, hello sir. Thanks for the opportunity and congratulations on a good set of numbers. So just wanted to understand your outlook on NIMs and specifically, I mean, this quarter you have seen, increase in yield on advances. So what is driving that, point one? And if you can, give a hint on your book bifurcation in terms of how much is MCLR linked, how much is repo linked, and how much is fixed rate loans. So that would be my first question.
So this is a NIM. As of now, it is 3.86. I think we may be able to range bound, if I can say that 3.75 to 3.85 level. I think we may be able to continue that as far as NIMs is concerned. And yield on advances, of course, it is slightly improved basically because the interest rates has increased last 1.5 years. And the same interest rate, if we continue, definitely the yield will continue to be the same level. And the board level decision also, we have the growth where we have envisaged only based upon the risk-based pricing is fixed. And that was added the yield improvement as well as NIM improvement. So the assets created in the during the period was based upon the risk-based pricing and which was reflected in the NII growth. Regarding the MCLR and this, I think it is at 48% MCLR and the remaining is coming under RLLR that. Around 50-50 will come or here by and large 5 basis per point here 5% plus or minus. Yes.
And there is no fixed rate lending.
Yes.
Yeah, so that actually, if you see, MCLR reset also happens, no? So when the rate was increasing and then suppose MCLR is also increased, that takes time of 6 months, 1 year as per, that whatsoever is given to companies. Say 1 year MCLR, then it will be due in 1 quarter, then another quarter and all. So that has also given a good impact.
Understood, sir. Understood. And sir, on this 48% MCLR, I mean, where we are in the journey of reset? I mean, how much of this book has already been reset, or how much is still pending? If you can give a color on that.
MCLR, we have a different product under MCLR. We have majority of the MCLR under the 1 year MCLR and 6 months and 3 months. These are the major MCLR products which we have. So 3 months MCLR get reset within 3 months, 6 months MCLR get reset within 6 months, and 1 year within one year. So most of the loan which was sanctioned almost 1 year back is already repriced. So our book presently is running with the current MCLR mostly.
Now, going forward, actually, that is more than 1 year MCLR, whatsoever was sanctioned. And during the August to, if you take January period, that whenever it will be coming from next August onwards, that portion only will come. So mostly are now reset.
Okay, understood. The second question, sir, is on the asset mix on the retail credit. So, I mean, if I see your other retail, which is something around 15,000 crore, that has, seen, good growth over the last many quarters. If you can, give some color on this book, is this largely gold loans and staff loans, or, what are there in this other retail credit?
Other retail credit is largely on the gold loan side. The major growth has happened in the gold loan. In addition to that, recently we have started giving the personal loan also on the digital platform. So some small, but this is the beginning. The personal loan is there. And then third is the Aadhaar loan, which we call is basically the loan against the pension of people. So that is a major component. These are the three major components of other loan. And in that, the gold loan is mainly increasing with a rapid growth of almost 40% on year-on-year basis.
Okay. So gold loan would be how much? Approx 10,000 crore or something like that, or?
It is 7,000 crore approximately. If I add both the gold loans, it will be approximately 7,000 plus.
Okay. And sir, what are the yields here? On this retail gold loan?
So the overall yield will be around 98.8%.
Okay, understood, sir. Sir, the next question is on the ECLGS. If you can, give your ECLGS figure, how much you have, disbursed and sanctioned, and what are the NPA levels there? And do you see any impact on the new guidelines on this ECLGS to recognize these stress accounts as NPA? That would be great.
ECLGS, we had originally sanctions around 3,200 crores when the scheme came in 2020 onwards. Till date, it is 3,200 crore has been sanctioned. What our observations on the ECLGS portfolio is that the portfolio is doing well. No major risk is observed till date. But even if you can very well see our SMA numbers and even the delinquencies also, is not very high in the MSME sector also. 2 years back it was slightly on a higher side, but for the last 1 year we have more or less controlled that MSME slippages also. So we don't find any risk on the ECLGS portfolio, and since the pricing was a lower rate of interest, so the customer has not defaulted on that largely. But yes, few accounts have slipped, that's a different thing, but it is in a routine course, but no major risk in the ECLGS portfolio.
Okay. And you are recognizing all that stressed accounts as NPA in line with the recent guidelines, right?
Yes. Whatever the IRAC norm says, we follow that for recognizing the NPA.
Okay. And sir, one last question, if I can squeeze in, is on the ECL migration. So, what is your, preliminary reading on the ECL migration? How much, let us say, total provisioning, additional provisioning requirement would be there? And if you have any contingent buffer or something like that.
As you know, the bank is well capitalized, is already having the 97-98% of PCR. And for the last few years, bank is also preparing the in-days balance sheet. ECL, if I use the management overlay, then approximately 2,000 to 2,500 crore of additional provision is required to meet the ECL guidelines. And as you know, that the bank is already holding 1,200 plus crore of COVID provisioning, plus additional 250 crore of the ECL provision which we have made for the current year. So almost 1,500 crore is already in the books of the bank.
Made this time.
Yeah. So 1,500 crore provision is already bank is having, and we need 2,000 to 2,500 crore. So bank don't foresee any challenge in ECL going forward.
And RBI has also given dispensation that it can be amortized over a period of 5 years. And looking to our profits, that the business we are envisaging, the profit is going to increase. So we don't find any problem It may happen that without waiting for 5 years, it may be adjusted in maybe within 1 or 2 years. First year or 2 years, yes.
Okay, understood, sir. Great. And sir, one last question. So on the modified duration on the investment book, if I see that, I mean, this quarter it has, seen increase from 1.2 years to 1.8 years. I mean, is this a one-off thing, or I mean, this is a conscious call taken by the, ALCO or something like that? That will be my last question. Yeah, thanks.
It is a conscious call. If you see that the short-term maturity rate has gone up and it is nearing to the 10-year G-Sec, so we have taken benefit of that, and we started accumulating the securities and having the duration of 1 to 2 years. And that we have accumulated at good yield. So at a present time that we will square it on the profit. And if it is lying in that portfolio, it will improve the yield of the investment.
Mr. Das, does that answer your question?
Yes, ma'am. Thank you so much, sir.
We have our next question from the line of Akash Jain from Ascon Global Services. Please go ahead.
Sir, my question is regarding the deposits. Total deposits have increased to 2,44,365 crores as against 2,34,083 crores in the last quarter. As a result, our CASA ratio has been affected. So wanted to understand how is the growth from the deposits? Is it from the fixed deposit side or bulk deposit?
There was a growth in the term deposit, but you see that we have not taken bulk deposit higher rates. So we have taken CDs, short-term CDs, where the interest rate is below 7%. So you know that if you want to contain your cost of deposit in cost of fund, so instead of taking bulk deposit, we switch over to borrowing under TREPS, where the interest rate is between 5.5 to 6.5%, and we have raised short-term or ultra short-term CDs, but because we are expecting that maybe after 2 months the rate will come down. So at that time you can again take the deposit, and this is a good strategy in order to contain the cost, and you see that impact is that our NIM has also improved.
I will supplement what our CFO sir has said. If you go through our cost of deposits, you will find that the entire quarter, when the rate has gone up and we have taken some deposit on the term deposit side also, but we have managed our cost of deposit. Our cost of deposit has increased by only 10 basis points. Okay. So whatever the deposit we have taken, though it may be in the form of the term deposit, but not at a very high cost deposit.
Okay. And my second question is regarding co-lending book. So what is the size of the co-lending book as on date or as on Q1 FY24, and how many NBFCs we have tied up?
We have 4 we tied up. It was 215 crores last year, March 22. Now 808 crores in co-lending. I'm sorry, I stand corrected. This is a TED code you have given. I stand corrected, I'll repeat. Co-lending portfolio, March 22, it was 147 crores. Now we have 371 crores. Out of which retail is 13 crores.
Okay. And what is the target for increasing this book?
So we always keep our option open. Wherever we get opportunity, we do it. As of this last couple of quarters, it was initially started with a good bang, but we don't find any kind of good partners nowadays. There is not much is happening in this segment. At least last quarter, I can say.
Co-lending. Actually, the co-lending, I think there are 2, no? One is
4.
No. It is option 1 and option. So how much we have in both the options put together?
So option 1 is a small amount. Only option 2 is the major amount.
So how much is that?
380 crores. Around 370 crores.
Yeah. So actually, we are, onboarding now our software solution. So for that purpose, we are strengthening our systems, and we are close to complete that software solution. But at the same time, we are in discussion with some 10 more people in that, so that we can take up the co-lending, agreements with them. So we are also finalizing right now terms and conditions with all these people. But what we were actually looking to, that to strengthen the still we have right now also we have one of the good software, but then with the age and the new gen what actually is required. So you may see our website. So there also we have came up with a co-lending fintech partner. We have impaneled. Now in that three we have impaneled, one we are concluding for a final implementation.
Okay. Also, sir, I wanted to understand as cost to income ratio is already, I think, around 37% in this quarter. So with this robotic process automation, as earlier said, that 25 to 30 processes will be automated. So to what extent this cost to income ratio can go down now?
See, if you see the cost to income, it is really very, very good. But actually, it is not only, the impact is not only, the RPA. Or see, actually, if we see RPA, there are 5 clear benefits from this robotic process automation. The first is certainly cost optimization. The second is the customer service. Because whenever you are manual, it takes maybe number of days and you may be having some errors. But when RPA comes, so actually like, your internet banking, that creation of the profile, now we have done and it is hardly 1.5 hours it is done in a single day. So 6 rounds it is working, that both in a particular one day. So the third is on the reconciliation side. So EJ log, which is actually very, very important for the bankers to reconcile. And it is very difficult also for the banks because you are having 3,000 to 10,000 ATMs. And how to read that electronic journal EJ logs. So that is also we have put into the robotic process automation. So now because your question was carrying two things. One is the implementation of RPA. So we are using it certainly for the cost optimization, but then the important 3 things is customer service. The third important thing is reconciliation. So we want to strengthen our compliances. Also, if you see the digital transactions which are happening and increasing 1.5 to 2x, now it needs a robotic process reconciliation because for the failed transaction you need to credit the customer's account immediately. But now coming to your cost to income, yes, we actually, if you see, our MD sir also gave the sort of, I would not say guidance, but then indication that we may be in the range of say 39 plus minus 1, something like that. So what I feel that yes, but then when we are opening a branch, so almost 150 to 180, and our as ED sir has also told that we are onboarding around say 2,000 people in various cadres in the bank to sustain and give a comfort to such sort of business. Then certainly we foresee that we may continue in the same range going forward.
Okay, and sir...
Mr. Jain, I request you to join back the queue, sir.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to answer queries from all participants, please restrict your questions to 2 at a time. You may join back the queue for follow-up questions. We'll take the next question from the line of Rahil Shah from Crown Capital. Please go ahead.
Hi, sir. Good evening. I just have 2 questions on, firstly, your views on AUM growth for FY24, and another is ROA outlook. So if you can just help me with these numbers. Thank you.
AUM growth is, we are expecting that though the growth rate of deposits is slightly more in Q1, it will normalize during the current year around 14 to 15% deposit growth and 20 to 22% advances growth as far as growth is concerned. And ROA is concerned, I think that ROA will be the same level. It can able to 1.3 to 1.4 level. Range bound ROA, we may be able to continue that.
Okay. Did you say 22% in advances?
Yes. 22 to 22% advances.
Right. And ROA will be in the same range. Okay. Got it.
We are targeting for a business of 5 lakh crore up to March 24.
Mm-hmm. Right. Okay. Sounds encouraging. Thank you and all the best.
Thank you.
Thank you. We have our next question from the line of Prashant Dalkade from Whitestone Advisors. Please go ahead.
Hello.
Yes, please go ahead.
Thank you for the opportunity. I have two questions. My first question is, if you see our NNPA was 435 crore in Q4 financial 23. During Q1, we did a provision of 776 crores, of which 530 crore is for NPA. Still, our NNPA did not come down in Q1. Still, it is still 414 crore. Can you explain why?
See, our provision required for Q1 for NNPA for that 539 crore, which has brought, and it was as compared to March, it was 545 and this time it is 539. So not much difference is there. And as we are already at the bottom of NNPA of 0.25, so it is always wish to maintain that range.
I will explain that. 250 crore contingent provision we have made, and it is not impacted anywhere because ECL provision of around 250 crore contingent provision we have kept for the current quarter. So that is not considered for NPA purpose or capital adequacy purpose. So it's a part of creating ECL conversion for the next year like that. Though we have around 1,250 crore provision, COVID provision we held up, and another board is of the opinion that we have to create over a period of time at least 1,000 crore provision for ECL purpose. So that is why this difference has come.
Okay, understood, sir.
Yes.
And my second question is, for Q1, our credit cost was 1.23%. For rest of the quarter, let's say 2, 3, 4, what will be the level?
I think it is continue to be around 1% will continue.
1%. Okay.
Conservative basis. Yes, sir.
If you see as per IRAC it would be below 0.5 because that we want to maintain that NPA ratio within the 0.24, 0.25. It means that everything you have to provide with the accounts list. So that's the third rule that it will be 1% is correct, but as per IRAC it will be below 0.5.
Yes.
Okay. Thank you, sir.
Okay.
Thank you. We have our next question from the line of Sushil Choksey from Indus Equity Advisors. Please go ahead.
Sir, congratulations to top management of Maharashtra and entire bank for a good performance and a successful QIP during the quarter. So my first question pertains to all the questions which are asked. Has the board taken to, irrespective of RBI, whether they grant you time or not, to start making a buffer on ECL provision, and if so, how much have you made so far?
Yes, sir. Just now I told that we have already COVID provision is kept there that we may utilize for the ECL, that is around 1,250 crore. In addition to that, another 250 crore we have already made. So another 500 crore provision is already kept under restructured area where we have not utilized. We have kept adequate provision kept for as and when ECL comes, we may be able to switch over that. That is our expectation.
Sorry to interrupt, sir, but you made a provision of between buffer and this at 1,750 crores. Is that the bank has made some kind of a calculation that provisionally this can be a ECL number with a 5-year or a 3-year window, whatever RBI provides, or that calculation is not there?
This is based upon some rough estimates. Because the final guideline is just to come, and this is all based upon some kind of draft based upon that. I think there may be some, definitely there may be good difference between the draft as well as the final guidelines. We are expecting that. So based upon the draft guideline only we have kept it that. So but however, we know that even if we final our draft guideline, there may not be much impact is going to happen for the bank. That is the purpose.
So do you estimate your ECL provision requirement to be in approximately range of 3,000 to 4,000 crore or more?
It will be 2,000 to 2,500 crore.
Now you can take 2,500 approximately.
So then you already almost achieved the number where you have a 5-year window.
Yes, yes.
You know that we are submitting the draft financial, that half-yearly pro forma financial India statement to RBI. So yes, we are aware of that and we have been making computation. Though there may be some change in RBI guidelines because already they have come with a discussion paper. So the estimation we have done for additional provisioning, so we are able to meet it. even from our existing provisionings.
My next question, what is the estimated cost of fund likely to be for the year from the current levels?
Estimated cost for funds.
Cost of fund right now is at 4.06%.
Cost of fund, it will hover between around 4% now.
Same range.
Same range, 3.70, 3.70.
There is a pause also, no, right now. So we foresee that will continue in the same range.
And yield on advances will remain at the current range, or it may tick up little higher?
More or less, it will remain the same change. It will depend upon what the RBI take the stance in respect of the repo. So, but our view is that the RBI is not going to do the high. So, for the year, it will be range bound.
Sir, as I hear between various quarter questions which I might have asked the management or whatever commentary I read in the newspaper or in the media, bank is working towards future enablers and future ready, whether it's digital, human resource and various other things. Some number was highlighted for digital spend for current year, and the previous year also I've heard that number. Based on the current estimates, have you revised the number upwards between human resource and digital, or it is more or less same?
It is more or less the same, and I think in that way only we are going, because if you take the last year and this year and compare to earlier years, so there is a good, I think, hike was there, and it is not only related to the budget but actually using it and properly using it through various channels, and which is actually giving good results for the bank. So I believe that if you see the RFPs and for which it is going intended to be used, then I think probably it is well thought of, and I think well deployed sort of a budget in IT. And similarly, like, scale 2 and 3. So various skills the bank is recruiting, which is also in our social media and for last, I think, if you see 1 year period, and including the CTO sort of a positions which we are taking from the market. So I think both of them are going hand in hand, and it is all intended to support what the bank is trying to achieve for last, say, 1 year and going forward also forward.
Sir, my last question is, at any point of time to prove more from as your enablers are all for future, in your advances, how much is public sector and how much is private sector? Have you ever bifurcated in terms of advances total?
Yeah, public
sector including states, I mean.
Yeah, that already we have given. It is around 16,000 crore is the government guaranteed exposure which are pertaining to various state and central government. Almost 10%.
No, I'm not on government-backed schemes or anything. I'm saying in total advances.
Out of total advances of 1,75,000 crore, 16,000 crore is almost government guaranteed exposure.
Sir, I'm not asking government guaranteed. I'm saying, let's say whether it is REC, PFC, NHAI, Food Corporation, one side, and the other side the private sector. So have you aggregated total? So if there is more of a private sector, it speaks volume for your bank that you are market oriented. That's the reason I'm asking.
That data is not immediately available.
No problem. I'll take question on that.
Even in such cases that they are working at very fine margin. So last 2 or 3 years that we intend to keep our interest at reasonable rate. So we have not invested much in that such PSUs. Instead of that, we have lent to the State Government Corporation backed by the State Guarantee, where the returns are reasonable and the guarantee is available. So, and it is also helping in when we are computing the CRR.
So only one data immediately available in the data. See, out of 1,75,000, 15,000, almost 16,000 crores government guaranteed advances.
Which we have given to State Government Corporation.
But that also public sector, how much is there, we can provide.
Thank you very much, and I'll come back, and all the best for the year to come back.
Thank you, sir. Thank you.
Thank you. We have our next question from the line of Ashok Ajmera from Ascon Global Services. Please go ahead.
Thanks a lot. I've been waiting right from the beginning and my line got disconnected 3-4 times. So please excuse me if there is any repetition. and give me some time to ask my question. Sir, at the very outset, sir, compliments to you for the fantastic results, and especially if you compare year on year. Everything on and Vijay Kumar here already explained that the bank ranking on various parameters, and even we have been writing about it. So compliments for that, sir, to all of you. Sir, my first question is on the credit growth. So now in this quarter, it is absolutely muted. 1,75,676 again 1,75,120, hardly some 500 crore or so. But we are still maintaining our target of 22% or so. It means that around 13 to 14,000 crore per quarter now onwards, the credit growth has to be. So how it is achievable, and are we looking in the same ratio of the corporate and the non-corporate credit, or in order to accelerate it, we are going to change that norm? So this is my...
That 60-40.
You need to complete the question.
Yeah, your question is complete?
So this is the one of the questions, sir. And my second observation is on when you go on the external rating slide, there the BB and below has gone up to 4,391 crore from as against 3,742 crore. Is it because of the revision in the credit rating? Because it cannot be because of the extended credit given now. So is it because of that? Related to that is unrated also has gone up by almost about 1,000 crores. So some observation, some color on that. That is my...
Okay. So the question number 2 I will take first. So actually, when you are saying a few of the accounts, so because as such we cannot take the name, but let me tell you some 5 accounts are there. And one is a very good hospital like an AIIMS. So there are certain, accounts we got very good opportunity where the hospitals are still running, and then part has to be done, but it is a very good and even it is a guarantee. So, there are some of the accounts which are unrated, but we got a very good opportunity and say 8 to 9 accounts. So where, we have underrated those. So that is where you find those figures which are coming. So it is not something which has, downgraded or something like that. It is a fresh sanction and it is a very good sanction. So on those basis it has come. The second one which you asked, your part 1 was the credit growth. So quarter to quarter. So let me also brief you that even if you see around 25% growth from June 22 to June 23. So if you take the March also there is a growth, but then we have sold IBPC at around 1,500 crores. Correct. So actually still we are banking upon that, and we are still having the sufficient both on the RAM. So RAM also when we talked about and the corporate, so still we are maintaining 41% plus minus 1 sort of. So we are in that range only. And the RAM also, if you see, we are continuing the same range bound growth, and which is almost same if we take quarter to quarter, which is 24.85% approximately.
I think pipeline, sir. Sanctions already in pipeline. The sanctioned amount undrawn.
Sharma ji?
Sir, it depends upon, there are certain projects which takes time to complete. So it depends upon the completion work.
Roughly he's asking.
Roughly,
around I think 7,000 crore.
More than that.
More than that.
Around
it will be around 10,000 approximately.
More than that. Yes.
Sir, okay, sir. My second question is on this SMA. Hello?
Yes.
Am I audible? Yeah. SMA 2 and 1. There also our figure has gone up. SMA 2 has gone from 289 crore to 529 crore, and SMA 1 from 504 to 743 crore. If you see quarter on quarter, sequential. So how are we? Placed today when already 15 days have gone. Whether this is because of it's going to be regular feature or there is some improvement in that?
Sir, if I take the overall percentage of the SMA level, it is little bit higher for the particular this first quarter. And you are talking about SMA 1 and SMA 2. Hardly there is one or two account where the amount is little bit higher, but all other accounts are in retail and MSME, and that retail also it is because of some difference between the EMI. So we are closely monitoring all the accounts. So it will be, and we have also placed the loan tracking cell, and we have also launched the new application Arjuna, which got Innovative 2023 award. So we are closely monitoring, and definitely there will be much improvement will happen.
And that June quarter is the slack quarter, so sometime number is bound to increase, but definitely in further quarter it will come down.
Sure, sir. My next question is
Mr. Ajmera, I request you to join back the queue, sir.
1.81.
Mr. Ajmera, there are other participants in the queue, sir. I request you to join.
For such a long time, and you need to give me sufficient time, please.
Sir, you can call us separately. We will reply.
All right, then my last question is on the investment book. That modified duration has gone up to 1.81 years, there's again 1.22. So is that, our little bit of 3,000 crore of the AFS book also has gone up. So can you give any reason for that? Have you gone into what kind of investment?
Ajmera, that I have already applied since you have joined late. I will repeat it. You know that in this quarter, the short-term yield has gone up and it was almost touching the 10-year G-Sec. And banks has taken the advances and 1 to 3 years remaining maturity paper we have accumulated. Not only it is extremely good yield, going forward that at the time of softening we will be able to sell it and earn good profit. So this is a deliberate attempt to accumulate these securities. And of course because of that amortization has within tolerance limit, it is below 2%, though our tolerance is 4.25%. But sometimes that you have to do, and it is a good strategy to earn the profits.
No, definitely. You have done well on the treasury front. I think treasury operations overall income is 352 crore as against 199 crore of loss. And even on the treasury book, the profit has been booked. So that's good. I just wanted to know the reason for, increasing.
Not only that, profit has improved, sir. Yield has also improved.
Yeah. Okay. Thank you very much. Thank you.
Thank you. We have our next question from the line of Jay Mundra from ICICI Securities. Please go ahead.
Yeah. Hi, sir. Good evening, and thanks for the opportunity. Sir, I have a question on ECL provisioning only. So I think you had mentioned that the bank would need around 2,500 crores of ECL provisions. So just wanted to understand the maths a little bit. Does this include the purely credit cost related provisions, or it includes some of the provisions pertaining to maybe investment book in terms of HTM, etc., or this is the portion for credit provisions?
No, when it is an overall number, including your investment, non-fund, or credit. So whatever ECL provisioning we are referring, it is overall number. All the assets together.
Right. No, so I understand, sir, but this is pertaining to the credit exposure, right? Not limited. So let's say, can there be so you are saying that the investment book of a corporate, right? Not for HTM, etc. So there may be some provisions which may come on HTM book, which is not included here. So only the credit exposure.
I will explain that when you will land to the India, most of your HTM portfolio it will be converted to amortized cost. In amortized cost, that there is no M2M, so you need not to make the ECL provisioning. Yes, in respect of that fair value and FTPL, FOCI and FTPL, you have to make MTM provision. So when we are talking about the ECL provision, we are taking both investment as well as that advances.
Okay. So even the non-credit, let's say credit in the sense, let's say default kind of a provision, which is credit loss or loan loss kind of a provisions, you are also including some of the hit when you migrate from on the treasury, standard treasury book also. Is that the understanding?
Yes. The most of your STM portfolio would be.
It is as per the draft report.
Yes.
Basically on the basis of draft
Yes,
report.
estimation. In anticipation,
Yes.
we are doing it.
So whatever draft report it carries, the department and the bank has worked out a similar line.
Correct. No, which is right, sir.
But it is entire book.
Right. Okay. And sir, when in the draft paper says that, SMA-2 is clearly a credit event and, there should be accelerated provisions on SMA-2, they have left open-ended that should SMA-1 be treated as a credit event or no. So in your calculation, have you taken SMA-1 as a trigger point also, or you have gone by SMA-2 as a trigger point?
A significant increase in the credit risk has been considered for calculation of ECL. So SMA-1 also the provisions, but that the calculation is slightly different from the SMA-2 and the restructured book. Restructured is considered as a stage 3 and SMA-2 is a stage 1. Accordingly, the provision is calculated.
Yeah. So as per that RBI guidelines, SMA-2 will be taken in stage 2. Whereas the earlier guidelines of the RBI state, it tells us that 30 days past due will be part of the stage 2. So there is a difference. So, but having said that, our stage 2 portfolio is very, very less. So the provision requirement is less.
Yeah, so that is what I'm wondering, sir. Our SMA-2 portfolio or even SMA-1 portfolio is very, very minuscule number or is a very limited number. And the 2,500 crore, if I calculate, it is around 1.5% of our loan book. So and we have already provided more than adequate on our stock of loans. Ideally, there should be write back when you look at lifetime losses on the already NPA. So this 2,500 crore, I was a bit struggling that, how are you getting that number?
This is arising on account of two things. One is the restructured book, which is around 4,000 crore. So that will be considered as on date, it has a normal provision of 10% maximum. But under the stage 3, it will have a ECL computations and provision is required for that. Second thing is the off-balance sheet items also has to be considered for provision. And then standard asset provision itself is higher on ECL methodology. So all these taken together is a provision is calculated around 2,000 to 2,500.
One thing is that I would like to inform you that when we are making that provision under stage 3 category, impaired assets, so we have used management overlay. So wherever the requirement of provision under India is 40 to 60%, and in Indian GAAP we have made 100% provision, so we have taken 100%. That benefit we will get when we land into India's. So, of course, that there will be some increase in the provision in respect of stage 1 to stage 2. So that will be offset by the whatever the provision will be released under stage 3.
And so you have not taken into consideration the probable provision release from, where you have already provided, let's say 99-100%.
Okay.
Yes.
Okay, understood. And sir, this ECL provision that we have done in this quarter, where does it, is it a part of standard assets? I mean, in the 981 crore of total provision, including income tax, where does it sit? Is it in non-performing assets or standard assets?
It is part of standard provision, standard asset provision.
Sure. And lastly, sir, the 1,200 crore provisions that we carry, right? I think this will also include the provisions on restructured assets, right?
No.
Sorry, that is not a part. I mean, this does not include the
restructured provision of 600 crore, which is separate from this 1,200 crore.
Okay, so that 600 provision is a separate number only.
Yeah.
So this 1,200 is pure contingent in that sense, right?
Yes.
Sure. Understood, sir. That is very, very helpful, sir. Thank you and all the best, sir.
Thank you.
Thank you. I would now like to hand the conference over to Shri A.S. Rajiv, Managing Director and Chief Executive Officer, for closing comments. Over to you, sir.
So, thank you so much and for all your support and all those who have joined this meeting. And whatever for the past 8 to 10 quarter or at least 15 to 16 quarter, whatever the commitments which we have given and the direction or some kind of guidance, whatever given, we could able to do that. And in future also we will try to do that. And whatever the figures and whatever we have talked, very conservative manner only we have talked, but we will try to improve further. Whatever we have talked, the figures may try to improve further in coming quarters. Thank you so much.
Thank you. On behalf of Bank of Maharashtra, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.